Welcome to Market Momentum, AI and Analysis. This week, the market is really at a crossroads. It's balanced on a knife's edge between a huge US-China summit and a critical decision from the Federal Reserve. So let's break down exactly what's driving all this momentum. Okay, let's dive right in. After what was a pretty rough October, that appetite for risk, it is surging back into the markets. We are just coming off a week where the desire to invest has been climbing again, right across the board. And this is huge. Both the S&P 500 and the Nasdaq closed out the week at their highest levels ever. Now, this wasn't just some random spike. It was kicked off by one key economic signal that really got everyone's attention. And that signal was the latest annual inflation number. So get this. The market was expecting 3.1%. It came in just a hair lower at 3.0%. And that tiny difference, that's all it took to just unleash a huge wave of buying in both stocks and crypto. And right on the heels of that, we saw Bitcoin climb back over that $111,000 mark. That's a pretty significant recovery from the sharp drop we saw back in October, which, you'll remember, was sparked by all those geopolitical tensions. So what's really going on here? What's driving this delicate dance between fear and, well, a whole lot of optimism? Well, it looks like the market's next big move might just hinge on one single event. And it's a big one. I'm talking about a crucial meeting between the leaders of the US and China, which is all set to happen this Thursday over in South Korea. So, this meeting could go one of two very different ways. The outcome that most people are betting on is the positive one. They reach some kind of agreement, the markets calm down, and that risk appetite we were just talking about gets a nice boost. But there's always a flip side. A negative outcome, where they can't make a deal, could unleash a ton of volatility and a pretty sharp drop in the market. And this is the key, really. Both sides have a very strong incentive to get a deal done. In the US, you've got midterm elections coming up, and an economic downturn is something they definitely don't want. And over in China, they're dealing with their own economic headaches and really can't afford to push away their biggest customer. But it's not all about geopolitics. The other huge event that has every investor glued to their screens this week is the US Federal Reserve's interest rate decision, and that's coming on Wednesday. Okay, so a quarter-point interest rate cut is pretty much a done deal at this point. The market is totally expecting it, especially after that good inflation news we talked about. It's already baked into the price. But listen, that rate cut, that's not the real story here. The big question, the potential surprise that could really shake things up, is about something else entirely. And that's the Fed's plan for its own massive balance sheet. See, for a while now, they've been doing something called quantitative tightening, which is basically a fancy way of saying they're pulling money out of the financial system. But, and this is a big but, the Fed has been dropping some pretty strong hints that they might be about to hit the brakes on this whole thing. So think about what that means. If they actually announce they're stopping this, it would be a huge policy U-turn. It would be like opening the floodgates for liquidity, a massive injection of cash into the system. And for assets like stocks and crypto, that's some serious rocket fuel. Okay, so let's shift gears a little. Because while all this big picture macro stuff is going on, there's another major shift happening, but this one is inside the crypto world itself. There's a real irony at the heart of the crypto market today, and this quote just nails it. Think about it. An asset created to be an alternative to the central financial system is now waiting on pins and needles for decisions from, you guessed it, the world's most powerful politicians and central bankers. But here's the twist. That same centralized world is now jumping in with both feet. Over the past few years, we've gone from big institutions calling it a scam to them actively integrating it into their business. It's been a massive change. And you really don't have to look far for proof. Just look at the headlines lately. You've got JP Morgan, the same bank whose CEO wanted to ban crypto, now letting clients use Bitcoin as collateral. Wild, right? Morgan Stanley's E-Trade is rolling out crypto trading. And now Japan's regulator is about to let banks in the world's third largest economy get in on the action. The floodgates are officially open. All right, so we've got geopolitics, we've got the Fed, we've got this massive institutional adoption. It's a lot to keep track of. So how in the world do you put together a strategy for the week ahead? All right, for you traders out there, let's talk technicals for Bitcoin. There are some really clear levels to keep an eye on. On the upside, you've got key resistance. Think of it as a price ceiling, around the $113,000 and $115,000 marks. But if that geopolitical news goes south, look for support, a potential price floor down near its 200-day moving average, which is sitting around $103,800. Look, with markets this choppy, trying to perfectly time the top or the bottom is, well, it's a fool's game. Having a disciplined strategy is way more important than getting the timing just right. And one of the most tried and true strategies out there is something called dollar cost averaging, or DCA for short. The idea couldn't be simpler. Instead of throwing a bunch of money in at once, you just commit to investing a set amount of money at a regular time, like say every Friday or the first of every month, no matter what the price is. It helps smooth out the crazy swings and lowers your risk of buying everything right at the top. So all of this brings us to a really fascinating question to chew on. As these lines between old school centralized finance and the new world of decentralized assets just keep getting blurrier, what does the future of crypto even look like? Is crypto losing what made it special in the first place? Or is this all part of it evolving into something way, way bigger than anyone imagined? Thanks for joining our channel. Your subscription and likes will be appreciated.